Dom Chu is here to break down the markets. Also with us, Zillow senior managing economist Chris Glynn and Patrick Whalen. He is the co-owner of the Fifth Street Group, which owns 5 restaurants in Charleston and Charlotte. Dom, Jay Powell isn't worried about inflation. Home prices are up, rentals are up, and people are stretching and stretching to buy more and more stuff. The markets are feeling it. Is it safe to say we are clearly in recovery?
I mean, we are clearly in recovery. The question is whether or not it stays that way. And by the way, you mentioned the Nasdaq's record closing high yesterday. It just hit another record intraday high shortly after the opening bell just moments ago. So the markets, Stephanie, appear to be siding, right, with Fed Chair Jay Powell, at least with regard to the current state of play. Now, one of the key measures that comes in for a lot of folks out there watching this is interest rates. Now, generally speaking, those interest rates are higher than they were a year ago, and in many cases significantly higher. Now, some of that was to do with the economic recovery, like you pointed out, from the pandemic. Also, those expectations for growth in the economy down the line. Some of it just has to do with sharp increases in prices for goods and services because of the pandemic. Now, a lot of experts are looking at things like commodity prices. You're talking corn, copper, lumber. Those things are significantly higher as well. A lot of that has to do with surging demand, about things getting back to normal. But a lot of it is also supply chain issues. They're bottlenecked because of reduced production capacity or shipping delays because of the pandemic. Now, those are all factors the Fed and its leaders believe will be worked out in the medium to longer term and then brought back into some kind of equilibrium. That's why they're using that word transitory to describe those higher prices. But a big point of discussion, Stephanie, right now in all of these financial circles, and I know you're hearing it too, is about what that moderation of prices mean. Does it mean a reset back to where we were pre-pandemic, or does it mean just a cool off from the higher levels that we've seen just now? And of course, all of that has to play into what the Fed's going to do about rates in the coming months and weeks.
All right, could houses cool off, Chris? Because house prices are insanely high, but sales are down. Is that because things have gotten so expensive at this point? People say it just doesn't make sense. I can't afford it.
Sales are down relative to the last few months worth of data. But if we look back further into the decade leading into COVID-19, sales are at a very high level and prices are quite strong. We expect sustained demand going forward from demographic factors and low interest rates, and quite frankly, what we call a great reshuffling, where households are untethered from office locations for perhaps the first time and reevaluating their housing needs in light of COVID-19. We expect demand to be strong for the foreseeable future.
Chris, we don't have enough supply. The supply of homes for sale is at record lows. The fact that the freeze on foreclosures is going to expire, so those homes could become available. The rental freeze is going to expire, so those landlords can get tenants out and they can decide to sell. Plus, with lumber prices down, you could see buildings spike again. Could there be increased supply in the next few months that could impact where things trade?
We're starting to see an increase in inventory in our data, where from April to May, there were more homes coming onto the market. As the vaccine has continued to be distributed, sellers are having more confidence to return to the market, and that's undoubtedly good news for inventory. Builders are building, new construction is up, and there's multiple sources of new inventory that will relieve some of this pressure on upward price growth.
Chris, do we need more protections, though? We're hearing about more and more buyers who are skipping things like home inspections, which are essential for people to buy, a good, safe house. Do we need to have protections put in place so this kind of reckless behavior doesn't continue? People are kind of being pressured into it.
I think these buyer choices are individual household level choices. Sure, buyers want to be competitive in their market and they want to get the house that they need, but it's also, their choice and their priority for what their housing needs actually are. The most important thing for buyers is that they identify a home that meets their needs in their budget. And I think that's the priority.
Yeah, well, if you have no idea what the costs are inside their house, if the water doesn't work, the furnace doesn't work, it suddenly gets a lot more expensive. Dom, if we are firmly in recovery and there's an ample amount of available jobs, why is the Biden administration considering continuing this rental freeze?
Well, I mean, it's probably about the dislocations in the market right now, right? There are certain people out there that would be adversely affected if they were to be kicked out of their home, if they were to lose that roof over their head.
Sure.
What the perspective right now is from the Biden administration is you want to at least protect those people. By the way, those people who are working right now, who are able to pay their rent and can do so, are likely not feeling the kinds of impact that other people who are less fortunate are. So this is really about trying to figure out how to balance all of these things out. And by the way, it's going to be a difficult situation if you have this dynamic continue to play out, because you mentioned those housing prices before. There's also a very, very big debate and discussion right now on Wall Street and Main Street, Stephanie, about why there is such price inflation for home prices. And by the way, many people on Wall Street are watching Wall Street itself entering that market, buying up construction, buying up single-family homes. There are a lot of deals out there that are causing some controversial aspects about that housing price discussion right now. So much of that is going to play into the narrative I'm sure that the Biden administration is going to look at with regard to trying to protect those people who are most vulnerable to getting kicked out of their homes.
Yeah. When suddenly you've got private equity firms buying up real estate en masse and people losing the roofs over their head, that doesn't seem like a way we'd want to have our country moving. I want to talk to you, Patrick, because you run restaurants. We've been hearing so much about worker shortages, but specifically in restaurants. When you raised wages to $15 an hour, your restaurants were flooded with applications. So is that the solution? Raise wages?
It's part of the solution, sure. Providing an environment where your staff can make a livable wage is the least that employers should do. And the more that you are able to pay them, the higher the productivity that you're going to get out of your employees becomes, and thus your product is better.
So are you still facing a worker shortage, or now that you're at $15 an hour, you're good to go?
Well, we're at $15 an hour. We also offer a feature called Tip the Kitchen, which was an initiative that we started that is a shared program between our guests and between the ownership, where a guest can leave a gratuity for the kitchen and the restaurant matches it. In the last 2 months, today's actually the 2-month marker, the kitchens have earned an additional $198,000 in earnings. That's between 4 kitchens in Charlotte and Charleston.
Wow. Is this going to be a temporary new thing, or are you going to keep it for good? You know, people going to restaurants right now don't mind giving big tips. They're happy to pay higher prices because we're so happy to be in restaurants again. Is this new Tip the Kitchen something you plan to keep for good?
We're going to keep it for good, and I would encourage all restaurant owners to consider it because it's an alternative to raising prices. We have not raised prices 1 penny coming back from COVID.
Wow.
And yet our team is able to earn on average $60 per team member per shift more. And we were able to do that by asking our guests to partner with us to help subsidize parts of the operation and make it better for their experience.